Hello friends, welcome to your YouTube channel Profit Derivation. In this video we are going to discuss market in coming week, that is 26th December to 30th December. So, let's start the video with a quick look at market last week. In the last week, trading session was going normally, then somewhere in the mid of the week news regarding resurgence of COVID cases in Japan, US, South Korea, Brazil and China started to begin. Situation of COVID cases in China is looking very serious. This news triggered selling pressure in market and Indian market started to fall drastically from its peak point. Nifty and Banknifty both broke their important support levels. Last week, from its peak, Banknifty fell more than 2,000 points and Nifty fell more than 650 points. Last week, US GDP data for the period June 2022 to September 2022 was released and its GDP for June to September period grew at the rate of 3.2%, which is better than expected. However, sometimes good news become bad news for the market. Last week, Brent crude oil traded between $78 to $85 per barrel. Crude oil is not expected to go much further from this level due to slowdown and COVID resurgence fear. As expected, gold is traded around $1,800 mark from last 3 weeks. Last week, gold crossed the mark of $1,800 but failed to sustain above it. Dollar index continuously remained within the mark of 105. In the coming week it is expected to go below the mark of 103. Due to COVID news, in the latter part of last week, rupees tried to cross the mark of rupee 83 per dollar but could not succeed. In the coming week, if FIIs increase their pace of selling, then rupee may cross the mark of 83 per dollar. Last week, India VIX increased drastically and goes beyond 16. Now it is time to be more cautious while trading. Last week, FII sold more than rupee 970 crore, whereas DII, as expected, support the market and bought for more than rupee 8,500 crore. After such a robust institutional buying, still market crashed by more than 3% in the last week. On Friday, 30th December, fiscal deficit and infrastructure output data for the month of November will be released. Besides this, bank loan and deposit growth data for fortnight ended 16th December will be released. In the last weekly analysis video, we discussed that Banknifty gave a bearish signal on daily and weekly chart, on top of which COVID resurgence news came and Banknifty fell more than 2,000 points from its weekly high. All banking stocks broke their support level. HDFC Bank, ICICI Bank and Axis Bank fell more than 2.5% and SBI Bank fell more than 4.5%. Whereas, surprisingly, Kotak Bank did not fell much. It just fell 1% because it is already falling from last 3 weeks. Banknifty is expected to not fell much from here. In the coming week, it can be traded between the range of 42,600 and 40,800 with great volatility. As discussed in the last weekly analysis video, IT stock did not do well and Reliance fell more around 2.5%. In the coming week, Nifty expected to trade between 17,635 to 18,200. Hope you found this analysis useful. In case you have any doubt, please ask in comment box. Thank you for watching. See you in next video. Have a great time.